Hey friends, in this video, I'm going to go through how to lose money on the Cash App investing app. I don't like to see people lose money that are investing in the stock market, so I kind of want to go through a few things to try to help prevent you from losing a lot of money and potentially getting burned so bad that you don't want to invest ever again. Feel free to leave any questions or comments down below, and I will try to answer every single one of them for you. I'm here for you to try to help you out as much as possible. Also, make sure to Hulk smash that thumbs up button. This information that I'm giving you is based on my experience, and I've been investing for over 10 years. So I've been around the block quite a few times. I've been through a lot of ups and a lot of downs in the stock market. I've invested in all kinds of things, from individual stocks to bonds to gold to cryptocurrency to mutual funds to index funds, all kinds of things. I've been around the block. I've done it. I've made a lot of mistakes. I've lost some money, but overall, I've made some money. And the reason is because I made sure not to do some of these things that I'm going to touch on in this video. And then towards the end of the video, I'm going to give you my recommendation of what I think you should be doing when it comes to investing your money based on what I would suggest my younger brother or sisters invest in. And to be honest with you, it is exactly how I have my sisters investing. So I can't necessarily give you any specific investing advice, but I can tell you how I've told my sisters to invest, and it's also the way that I invest as well. The first thing that I really want you to understand is that whenever you see your stocks go down in price or your overall portfolio go down in price, I don't want you to just sell because you're down. When you go into an investment, when you make your initial purchase, and if you repurchase any more of that stock, you need to have an understanding of how long you plan on holding that stock. So if your decision is to hold that stock forever, then you shouldn't really be concerned if it goes down in price, over the next week or the next month or the next year, honestly, 2 years, 5 years. So you kind of need to get that out of the way right at the beginning. Ask yourself, how long do I plan on holding this? Because if your goal is to hold it long term and it starts to crash, the stock price starts to crash, you're naturally just going to want to sell because you're going to be freaking out. It's funny because a lot of people, they want to buy more when the stock price is going up, but they don't want to buy anymore when the stock price is going down, even though you should technically be buying that stock when it decreases in value. When it goes down, you should buy it. When it goes up, you should buy it. An up or down signal should not determine whether you should or shouldn't purchase a stock. You should know going into it whether I'm going to hold it for a short period of time or a long period of time. If you're just holding it for a short period of time, you're technically trading stocks. You're not necessarily investing. You're kind of doing a type of investing, but investing is more of a long-term outlook. So keep that in mind. Don't necessarily panic sell when you're down. Now that doesn't mean to never sell when a stock goes down that you're holding. If it goes down and you're thinking about selling, you need to reevaluate, okay, why did it go down? Do I really believe in this company long term? Look at the numbers behind the company to decide, okay, I still believe in this company long term, so I'm going to hold on to it. But if you kind of change your mind and you've looked at all the data and you've decided, something big has changed to where I don't want to own this stock anymore. It's different now than when I initially looked at it. In that case, yes, it's okay to sell if you're down, but don't always default to selling whenever a stock price is down. The next way to lose money on Cash App investing is by not understanding what you're actually investing in. Now, I'm not talking from the standpoint of you don't know what the company does, because if you see Apple stock out there that you might want to potentially buy, of course, you know what Apple does. They sell products and they sell services as well. And you could probably name some of those products and services of what they sell and how they make their money. But that's not always enough. You need to dig a little bit deeper. And you really need to understand, okay, what are the numbers behind Apple? Are they making money or are they losing money? And if they're losing money, when did they actually figure or think that they're going to become profitable? Is it 5 years in the future? Is it 10 years? Is it 20 years? Is it 30 years? How long? And at that point, you have to ask yourself, okay, well, if they don't plan on turning a profit for like 10 years, then does it make sense for me to purchase this stock, so Apple stock, at this point in time based on this price? That's for you to really decide. You can go into the Apple stock within Cash App. I pulled up my screen here. And if we scroll down, one feature that Cash App did add, which I love, is they give you some key stats about the company when it comes to share price, market cap, their 12-month revenue, their net profits over the last 12 months. We can scroll to the right and we can see some additional information, PE ratio, operating margin. Now, these stats are great, and they could help you decide whether you should or shouldn't purchase a stock. But it doesn't necessarily tell the whole story. So you shouldn't just buy stocks on Cash App based on these initial key stats that you see right here. You almost need to see what the key stats were over the past couple of years, couple of quarters, to see how they're trending. Because if it's trending in a negative direction, then should you still buy that stock? Does it still make sense for you to purchase it at that particular price? Maybe yes, and maybe no. So you don't get all of the details here on Cash App. So keep that in mind. You have to understand what you're investing in, especially from a numbers perspective. Don't just read the news, and if you hear that Apple is coming out with an Apple car, that you should just buy this stock because that means that it's automatically going to be making more money. Not necessarily. Now, some people do trade the news. You'll see a lot of YouTube channels that are talking about a stock, and the only reason they're talking about it potentially going up 100x is because of a piece of news that they saw come through the wire. I don't know what that means, wire. But, that came across them. They came across on a website that they were reading. Just because you see a news article, like I said, that Apple is going to start coming out with an Apple car, doesn't mean you should purchase the stock. So if you see people on YouTube trying to push stocks based on a news article that they see and that they're reporting to you in that video, don't just buy it. You need to ask yourself, okay, does it make sense based on the numbers? Don't just trust people blindly that you see on YouTube, because I say this all the time. You can give me the most horrible company's stock to purchase, and if you say, Jared, here is Joe Schmo's gutter cleaning service, I could talk that stock up all day. I can make it seem like a pig and put it on with lipstick on it. I could make it look so good. So always keep that in mind. Whenever you see someone on YouTube spouting off about buying this next hot stock, don't just buy it blindly. Don't just go on Cash App, find it, and purchase that stock, because you could potentially lose money. That person's just talking about the stock. And guess what? They're not investing your money for you. You are investing your money. So if you listen to them and you lose money, what are you going to go back to them and say, hey, I thought you said this wasn't going to go up 100x, or potentially go up 100x. And they're going to say, well, I was just reporting the news, man. Don't listen to me. The next way to lose money on Cash App investing is by only expecting your stocks to go up. This is one thing that a lot of people forget. Everyone is so smart when the stock market is going up, but everyone gets freaked out when the stock market is going down. No one looks like a genius when the stock market's going down. Everyone looks like a genius when the stock market's going up. But that's what stocks do, and any kind of investments on the stock market do. They go up and they go down in the short term. But we've seen, based on history, that over a long period of time, as long as you stay invested, your stocks will most likely go up. Now, not every individual stocks. There's a lot of trash stocks out there, because you got to think there's thousands and thousands of stocks for you to pick from. So not all stocks are going to go up, and you might be one of those unlucky people that invests in one of those losers. But overall, the stock market goes up. And with the recommendation that I'm going to give to my sisters and my brother, if you were my one of my siblings, that kind of doesn't really matter whether one stock goes up or one stock goes down. That doesn't matter based on how I'm investing and how my siblings, or how I'm having my siblings invest either. So hang tight and we'll touch on that in a minute. The next way to lose money on Cash App investing is by only investing in lower priced stocks. So the price per share of a stock doesn't really tell you anything. Just because a stock is only maybe $6 per share doesn't mean that stock is on sale. The same way as if one share of Berkshire Hathaway, for example, is $340,000 for one share, that doesn't mean that stock is overpriced either. They could be underpriced. They could be overpriced, right? That $6 stock could be overpriced. So always keep that in mind, that the price of a stock does not tell you anything. What tells you something are the fundamentals behind that stock, right? The balance sheet, the income statement, things like that. When you look at that and understand what those look like, how they've been trending for the past handful of years, handful of quarters, that's going to tell you a better picture of what's actually going on with that stock. So don't just buy a stock because it looks cheap on the surface. There's a reason that price is what it is. The next way to lose money on Cash App investing is by constantly investing in hype stocks. Here's the thing about hype stocks. They go up in value in a very short period of time, but they don't always stay up that high. They always drop. That's why they're called hype stocks, right? They're hype. The value and the price per share is getting hyped up for a reason. There's a lot of people piling in. But then guess what? The people get their gains and they get out, right? They get their gains and they get out. And the more people that get out, the more the stock price crashes. And usually, by the time you hear about that stock, you've kind of already lost out on the run. You might be able to hit some of the additional tippy top that it's going to get, but man, you better plan on getting out very quickly if you're investing in hype stocks. And if you are, that's okay. Like, I know that in the beginning of 2021, I did invest in GameStop when it had that first huge run up. But I went into that trade knowing that I was just going to make a quick profit and get out. I was not holding that thing. I ended up making, I think it was like $2,000 or $3,000, and then I got out because I wasn't planning on holding it long term. So if you go in with that intention, then you'll be okay. But also understand that when you go into those kinds of trades, it's very speculative because it's being hyped up right, at that point in time by the news. So you have to understand you could lose money. So when I invested my money, I think I put in like $1,000. I went into it knowing that, hey, if I lose this $1,000, it's not going to make or break me. This is kind of just like my play gambling money. So I wasn't concerned. Now, I just got lucky. I legit got lucky. There was no skill involved with what I did. I could have got, the point in time that I got in, it could have been the very top of the price, and it could have crashed right after that. But I went into it knowing that I would most likely lose this $1,000 that I was putting in. You got to think about FOMO, okay? Fear of missing out. It's okay to miss out on a run-up in a hype stock. It's okay. You know why it's okay? Because there's going to be another one. So don't try to, for example, buy into GameStop trying to make a quick buck because everybody else is, or you're hearing that everybody else is making all of this money. It's okay to say, you know what? It's probably the height of this hype stock right now. I'm just going to sit back and watch. Don't get any FOMO. Understand that yes, you are going to miss out on the potential earnings that you could make. But you're also missing out on the potential losses that you could have as well, right? Everyone thinks about the positive, how much money you could make when it comes to FOMO, but you don't think about the negatives, right? You could have potentially missed out on the losses, or you might have missed out on the losses, which in that case, it's okay. Hindsight's always 20/20, right? We like to say, oh, I should have invested in Bitcoin 3 years ago, but you didn't, and that's okay. I should have invested in AMC. It's running up right now. Same thing with GameStop. Same thing with Tesla. But you didn't. And you know what? It's okay. So always remember that There's going to be another hype stock at some point in the future. Maybe it's tomorrow, maybe it's in a week, maybe it's in a year. And if you have some extra money lying around and you've got the rest of your financial life kind of in order, then go for it. Play around with some money. I have hundreds of thousands of dollars invested in the stock market. I have 8 months worth of expenses set aside in case I lose my job. I had an extra $1,000 lying around. Of course I can gamble it on GameStop if I want to, right? But someone who is living paycheck to paycheck, they can't afford to do that, and that's okay. If you can't do it right now, that's okay. At some point, you will be able to. You'll be able to play around with some money and gamble a little bit on those hype stocks at some point in the future. Just not today, and that's okay. Back when I had $82,000 of debt while I was working on paying it off, guess what? I didn't have that extra money to invest in like a hype stock, and that's okay. Because guess what? Now I'm in a better financial position, and now I can afford to do that. So it's actually pretty fun. But don't feel bad if you can't do it right now. It'll be okay. There's going to be a lot more options out there between now and the day that you die. And that brings us into the next point on how to lose money on Cash App investing. And that's if you're investing money that you cannot afford to lose. So we're all at different financial stages of our lives. As I touched on a second ago, at one point I was $82,000 in debt. I was not in a good financial position to be investing money that instead was put towards paying down that bad debt that I had. So I couldn't necessarily afford to lose the money. I needed to get those debts paid off. So I don't want you to invest money that you can't afford to lose. So if you have $100 lying around, I don't want you to go in that you need to pay for rent this month or next month. I don't want you going and investing that $100. It's better to be set aside. That way it doesn't destroy your financial life, because when you're investing, as I touched on before, the stock market goes up and down quite a bit in the short term, but in the long term, it trends upwards. I think about 75% of the time, the stock market is up. If we look at past performance. So, but that's still no guarantee of what it's going to do tomorrow, what it's going to do in a year from now, what it's going to do in 2 years from now. We have no idea. So please do not invest money that you can't afford to lose. Do not invest money for income that you're looking for today. And the next way to lose money on Cash App investing is by, wait for it, investing in Bitcoin. Now, this is coming from a guy who has tens of thousands of dollars invested in Bitcoin. But here's the thing with investing in Bitcoin, especially on Cash App, is most of the people who are investing in Bitcoin on Cash App, they're beginners. And I'm not trying to knock anybody who is investing on Cash App. I'm not trying to knock you by calling you beginner, right? We all started somewhere. I invest in Bitcoin because I can handle the volatility. Bitcoin and cryptocurrency in general is very up and down. One day you could be up 10%, 20%. The next day you could be down 10%, 20%, 30%. And it might not recover from that loss for another 1, 2, 3 years. It might take a while. And cryptocurrency is a funny one with that volatility to where, a lot of people can't handle seeing themselves lose 30%. So if you invested $1,000 and you lost 30%, there goes $300 right there. Are you okay with that? Can you stick with it? Because if you can't, then you should not be in any sort of cryptocurrency or Bitcoin specifically, because that's all you can buy on Cash App at this point. So I would suggest that if you want to get into cryptocurrency, wait. First, get used to investing in the stock market. All right, get used to the volatility in the stock market, because the volatility in the stock market is nothing compared to the volatility in Bitcoin and cryptocurrency in general. Okay, lastly, this is how, if you were one of my siblings, I would tell you to invest your money. And this is exactly how I invest my money. The majority of my money is invested in this. And I'm going to pretend that you're my brother or sister. And this is exactly how I have my sisters actually invested right now. Index funds. This is by far my favorite investment ever. If you're not familiar with what index funds are, you basically buy one share of an index fund, and you're basically purchasing a little bit of a large number of stocks, I should say. So let me take you to my favorite one. Let me open up my Cash App app. Here it is. It's Vanguard Total Stock Market ETF. VTI is the ticker symbol. Now, the reason I love this is because for every $1 I put in, this Vanguard Total Stock Market ETF essentially spreads that $1 among 3,600 stocks. So instead of trying to guess which individual stock or, 20 stocks to purchase individually, I just say, and I've had my siblings do this, just say, you know what, forget it. I'm not going to try to pick the winners. I'm not going to try to hopefully not pick the losers. I'm just going to buy a whole bunch of stocks at once and deal with it. And overall, because there's so many stocks that are held within this Vanguard Total Stock Market Index Fund, you're really diversifying yourself. So let's say of those 3,600 stocks, 500 of them just tank. They're just horrible. They lose money. But guess what? You have the other 3,100 that are a part of this Vanguard Total Stock Market ETF or index fund that can make up for the losses of those 500 companies that it's holding. So that's one reason that I love index funds. VTI, so this one. The other one is VOO. VOO holds 500 stocks, and it's actually the 500 largest companies within the stock market. So, think like your Microsofts, your Apples, your Netflixes, your Facebooks, things like that. And of these 500, actually, this is kind of interesting. Of these 500 that are held in VOO that I'm showing you right now, these 500 are also in VTI, that Vanguard Total Stock Market Index Fund. Now, that's why I like that VTI better than VOO. VOO is great. I also hold VOO in some of my other brokerage accounts. But these 500 companies in VOO are also actually a part of VTI as well. So if you invest in VTI, then you're technically investing in VOO as well, plus another 3,100 companies because VTI holds 3,600 different stocks. So that's what I suggest, starting out with index funds, and then eventually if you want to start investing in individual stocks, go for it. But I would say start out with index funds like VTI or VOO and get used to investing in general. Understand what your risk tolerance is. Because you might realize, I can't handle the ups and downs of buying individual stocks. It is just kicking my butt. And you might decide, I don't ever want to invest in individual stocks. And for the most part, that's all I invest in is index funds because I don't like the volatility up and down. A Vanguard S&P 500 index fund, when it's up, it might only be up 1 or 2% on a day. Right, but it only might be down 1 or 2% in a day. But an individual stock, that thing could be up 10% one day, down 10%. So you're not going to necessarily get the returns like you would if you invested in an individual stocks, but in an individual stock. But what it's doing for you what you're doing by investing in that index fund is you're accepting the average return, which based on history, the average return is about 7% per year, which is pretty good.